Hello and welcome back to Digital Assets Daily. Good morning, good afternoon, or good evening, wherever you are in your corner of the world. Tonight we're going to step into digital assets and cryptocurrencies and where they are headed for their endgame. Tonight's discussion, obviously, and of course, will be about XRP. I'll try and stay on track and get through this as quickly as possible, but we do have a lot of information to cover. So here we go. The race to replace Bitcoin. And as with the videos, there will always be a theme from beginning to end that will start making more sense and get clear as we go. There's an epic battle for the future of money, and the outcome is murky. It might have several winners, it might have no winners. But one thing is crystal clear: the most exciting battle in this long war is taking place in San Francisco. And the town isn't big enough for both Ripple Labs and Stellar. And that's interesting, it always comes up in my research of those two together. Two of the contenders hoping to replace not just Bitcoin, but the almighty dollar. The coining of digital money, cryptocurrency, has the potential to be the most important financial development of this century. On one side are governments, fiat currencies, and the world banking industry. On the other side are hundreds of young companies backed by brilliant cryptographers, complex programming, and security protocols, and varying degrees of anti-establishment fervor. The United States government, European Union, and other currency-creating governments will use every means to keep control of money. Likewise, banking giants such as JP Morgan Chase, Bank of America, Citigroup, and Wells Fargo are strongly invested in the status quo. Pardon me. And if you've been on this channel since we've begun, they're also, they are also connected back to Ripple and XRP. The result of this fight will decide, among other things, the fate of developing economies, access to financial services, inflation, terrorism, all forms of economic crime, from insider trading to drug dealing, the ability of governments to spy on citizens, financial transactions, tax collection, and the relationship between governments and the governed. The best known cryptocurrency is Bitcoin. Bitcoin was created in 2009 by Satoshi Nakamoto, likely a pseudonym for a group of cryptographers. Bitcoin has a massive head start and has already developed significant brand equity, but among aficionados, there is a wide consensus that the weaknesses in Bitcoin are fatal and unfixable. We've already seen two major breaches: Mt. Gox, the biggest Bitcoin disaster to date, in which almost 4% of the finite supply of Bitcoin, at the time worth $450 million, was lost. And just 2 weeks ago, at the time of this article, Bitstamp, which coughed up $5 million to hackers. There will be a Bitcoin 2.0, and it will likely emerge from one of the hundreds of currencies that have been started in the past couple of years. And that's going to be the theme there of this section. Better, faster, cheaper. Ripple exec claims XRP is Bitcoin 2.0. Ripple exec XRP is Bitcoin 2.0. It's like Bitcoin on steroids. XRP is Bitcoin 2.0, says Ripple's chief market strategist, Corey Johnson. And then we have the article stating the man behind Ripple's push to boost XRP says blockchain and crypto will radically transform global financial ecosystem. The head of Ripple's investment and development arm, Spring, says he expects blockchain and cryptocurrency to radically transform the way money moves around the world. In the new episode of The Ripple Drop, Ethan Beard says that within the next 10 years, he believes crypto assets will become an essential element in the movement of money, both domestic and across borders. I predict that over the next decade, we're going to see blockchain and cryptocurrencies really replace the entire underpinnings and the infrastructure of the financial system. And the way money moves will touch a cryptocurrency somewhere in that stack. It may not be end users using XRP or Bitcoin to buy things, but any payment that you will make will touch blockchain, will touch a cryptocurrency in some form. Then we have Joel Katz, David Schwartz talking about XRP collateralized stablecoins. Pardon me. Stating, we propose a scheme as follows. Anyone may place XRP into a position that they own. If the position is sufficiently collateralized, it may issue a stablecoin. Position owners may adjust the XRP in their positions so long as it maintains sufficient collateral. Position owners may issue and redeem stablecoins in their positions so long as it maintains sufficient collateral. Severely under-collateralized positions may be taken over by recollateralizing them. Whoever does so keeps the remaining excess collateral. An order book mechanism will be used to permit the stablecoin to be automatically exchanged for XRP by redeeming against the least collateralized positions first. This encourages over-collateralization and cleans up positions that are in danger of becoming under-collateralized. Then we have another article. Ripple's David Schwartz proposes XRP collateralized stablecoin to improve the XRP ledger. Ripple CTO David Schwartz recently expressed his opinion on how to improve the XRP ledger in terms of functionality, as well as expanding its significant reach to a wider ecosystem. In a recent blog post released by Schwartz, the CTO proposed that the creation of a stablecoin collateralized with XRP was the answer in this case. And if you are on our Twitter account as well, then you would have seen the video we shared earlier today. Or possibly yesterday. Apologize, it's been a busy day. The XRP ledger, which operates as an open and decentralized system for cross-border payments, was suddenly associated with a plan that would not be perfectly decentralized. The model advanced by Schwartz also drew similarities from DAI stablecoins model, which was built on the ETH, the Ethereum blockchain, and backed with Ether. In a more typical manner, stablecoins such as Tether and USDC are usually backed with a huge supply of fiat currency, so that the stability of the virtual asset is maintained. Schwartz suggested a different scenario, one where the stablecoin would be backed by an equivalent amount in XRP to give the assets its value, he said. The key distinguishing property of this proposal is that the stablecoin is always redeemable for XRP on the ledger from the collateral pool. And I find that very exciting and interesting, as we've stated again on our Twitter account regarding this issue. Citing an example, Schwartz explained that a user making on-ledger transactions by holding one USD-backed stablecoin would be able to make payments just like holding $1 worth of XRP. The aspect of part centralization was a major question here, he said. Some organization or federation still must supply the price the asset is pegged to on a continuous basis, or the stablecoin will freeze. The creation of a stablecoin was understood, but any stablecoin needs to be updated with the current price of the USD, which would require a centralized party to keep the value in check. Another point of concern is the value of XRP itself. The volatility of virtual assets is evident, more so after the recent decline in the cryptocurrency's market's evaluation. Hence, opting for a volatile asset as a reserve for a stablecoin in circulation would be observed as a very high-risk option. At press time, XRP was valued at 0.248 at the time of this article. Currently, it's 0.19. With a market cap of $10 billion, Bitcoin was the major target in the recent onslaught of the bears, depreciating down to 82.69 at the time of this writing, after consolidating above 10K for a long time. But hearing this article, again, to me, it only makes sense as Russia has a gold-backed crypto. China has a gold-backed crypto. Switzerland has a gold-backed crypto. London has a gold-backed crypto. The UAE has a gold-backed crypto. Singapore has a gold-backed crypto. Australia has a gold-backed crypto. Ireland has a gold-backed crypto. Indonesia has a gold-backed crypto. Zimbabwe has a gold-backed crypto. The Cayman Islands have a gold-backed crypto. And I can go on and on and on. So you can see where I'm going with this. And I think it starts making sense as you see the pattern. If we have an XRP-backed stablecoin, what is going to back the XRP, as it says, so it's not volatile? If the rest of the world is backing their cryptocurrency with gold, it only makes sense. And what do we have here? Let's scroll in and zoom to the dollar to gold ratio. Right in the center of your screen, we have $9,681 dollar to gold ratio per ounce. Zoom back out so you can see this is a live standing debt clock. Feel free to go there. The link will be provided in our description below. And then let's quickly go into all of the world's money and markets in one visualization, comparing the world's money and markets. How this visualization works: each square this size, if you're able to look at your screen, equals $100 billion. Context on each category can be found on the right side of the screen. The blocks will be center to left. If you're unable to view your screen, feel free to replay the video back at another time when you're able to look at it. You have silver. It's about a portion of the block. Then you have the cryptocurrency split up. The blue is Ethereum. The rest of the altcoins are in black, and Bitcoin, the largest block, in gold. Then you have the world's biggest companies. Apple is the world's largest public company with market capitalization of $807 billion. You have the world's richest people. Pardon me, let me take a quick sip. Sorry about that. You have the 50 richest people. In aggregate, the world's richest people are worth a hefty $1.9 trillion. And that's including Bill Gates, Bezos, Buffett, Zuckerberg, Ma, and Musk. You have California's GDP, which has a GDP of $2.9 trillion. You have the Fed's balance sheet, which is between 2008 and 2014, $4.5 trillion. You can see these blocks are significantly growing larger and larger. The coins and the banknotes of the world's coins and banknotes is 7.6 trillion. The world's gold, the world's total above ground gold reserves are estimated at 187,200 tons by the World Gold Council. Using a $1,275 an ounce spot price, the world's gold is worth 7.7 trillion. Now imagine moving that up times the gold we just saw at nearly $10,000 an ounce, and that brings that up significantly Then you have the stock markets at $73 trillion broken down by the nations. The UK, Japan, China, the Euro area, the US, and the rest of the world. Very significant. You have the global money supply running at $36.8 trillion. That includes the world coins, banknotes, and checking deposits. You have broad money. Let's see if we can compare them a little bit. You can see it's significantly larger at $90.4 trillion. You have the global debt at $215 trillion, and that is massive if you're able to view that screen. The total amount of debt, including accumulated by governments, corporations, and households together, it adds up to $215 trillion, which is 325% of global GDP. And we do know that XRP can easily pay for all of that global debt. We'll hold off on that, as we've mentioned it many times in this channel. 70 trillion of the world debt, 33%, was added in the last decade alone. Pardon me. Global debt is currently at record highs, partially thanks to the sky-high expansion of credit in China. On the U.S. media, you hear a lot of it as U.S. debt, but on the global news, it's China debt. Global real estate estimated at $217 trillion, another very, very, very massive amount. And that's broken down into commercial real estate, agricultural real estate, and residential. 21%, I thought these statistics were pretty interesting. 21% of the world's total residential asset value is in North America, despite the fact that only 5% of that population live there. Excuse me. 21% of the world's total residential asset value is in North America, despite the fact that only 5% of the population lives there. Europe contains 24% of residential assets by value, but only houses 11% of the population. Now here's where it's going to get very exciting and to our point. Derivatives on a low-end estimate, $544 trillion. If you're able to view your screen, we are still scrolling. Now imagine how massive that is. I'm going to scroll back up to the beginning of $544 trillion. Again, the low estimate of the size and scope of global derivative markets is $544 trillion on a national contract basis. And what is a derivative? It's a contract between two or more parties that derives its value from the performance of an underlying asset, index, or entity. And again, derivatives market. I'm going to be swiping down starting now at $544 trillion on the low market. Let's pause and read this. Banks typically use high amounts of leverage to attain these positions. Some derivatives, such as commodity futures, are traded on regulated exchanges such as the Chicago Mercantile Exchange, the CME. However, the majority of derivatives are traded outside of exchanges between private companies and are called over-the-counter trades, OTC. Scrolling back down. Pause again. For collateralized debt obligations and credit default swaps are two derivative types that are now infamous for their roles in the 2008 financial crisis. Going to continue swiping again. Now, here we've reached the low-end estimate of $544 trillion. Now, the high estimate is $1.2 quadrillion. Let that sink in for a moment. $1.2 quadrillion for derivatives on the high end. The views on derivatives: many finance professionals consider derivatives to be zero-sum trades. In other words, there's a winner and a loser on each side of the bet. However, other experts warn that the massive size of the derivatives market could contain significant risk and consequences to global markets. The positives are derivatives can be used to help allocate and take price risk out of everything from corn to cattle stock. There are good derivatives that are self-regulating, such as interest rate swaps and currency forwards. I've been working for exchanges for 41 years. I do not think regulation is incompatible with an efficient market. I think derivatives promote efficiencies, says Dr. Richard Sandor. Excuse me. The derivatives genie is now well out of the bottle, and these instruments will almost certainly multiply in variety and number until some event makes their toxicity clear. Central banks and governments have so far found no effective way to control or even monitor the risk posed by these contracts. In my view, derivatives are financial weapons of mass destruction, carrying dangers that, while now latent, are potentially lethal, stated by Warren Buffett. If there were not derivatives, there would be no bank loans at all today, because people want to get fixed-rate 30-year loans, but banks don't want to keep 30-year loans on their books, stated by Jeff Green. And we're still scrolling. The national value is not the only way to measure derivatives. There's also the gross market value of derivatives, which stands at $20.7 trillion as a low-end estimate. This is often considered a more accurate measure pertaining to the overall risk of the derivatives market through this value, though this value is still very large. Still scrolling, and that's it. Boom. And if you're able to view the screen, to the right you see the tiny little square, which is Bitcoin. And we're going to scroll back up to the beginning one more time. Of $1.2 quadrillion in derivatives. I'm still swiping. If you're unable to view your screen, we're still swiping. Still going. Right there. That is how massive that is compared to the one single block of Bitcoin. The reason we brought that up is this. Ripple partners with crypto facilities for XRP derivatives. We are excited to announce that we are partnering with Crypto Facilities, a leader in digital asset derivatives, to create a marketplace for XRP derivatives. As with other assets or financial products around the world, participants desire the ability to manage their risk. An XRP derivatives market enables both hedging and speculative positioning in XRP. It also contributes to price discovery and market efficiency in XRP. We're going to move to the next. Ripple announces its XRP Futures trading on Crypto Facilities. Excuse me. Today, Ripple is excited to announce that Crypto Facilities will be the first derivatives exchange to list regulated XRP futures contracts. To further establish digital assets as a new asset class, Crypto Facilities is also partnering with the CME Group, which has invested in Ripple through its venture arm. So you can see how this is interwoven throughout, and this is going to be massive as it's still fresh in your mind how big that single block of Bitcoin was, that tiny little gold block, compared to $1.2 trillion in the derivatives market. There has been a lot of focus for the past, few years, 4+ years, easily, on just remittance, and totally forgetting that XRP and Ripple are focused on all value, not just remittance, which people think of as, will XRP take over Swift? Will Ripple take over Swift? What about Western Union? What about MoneyGram? Those, I believe, are amazing, don't get me wrong, but they're so tiny compared to derivatives. We're going to go into the next tier. Ripple's XRP might be the next big crypto futures market. Bitcoin futures may have been launched with a tremendous fanfare, but XRP futures, on the other hand, not so much. In fact, UK-based startup Crypto Facilities has been operating a futures market for the world's third largest cryptocurrency, developed by blockchain startup Ripple Inc. for almost 18 months now. And while the company's CEO, Timo Schläfer, has been tight-lipped about the product so far, he sees trends in recent data that indicate broader XRP futures adoption may be on the horizon. We have pretty good order books, Schläfer told CoinDesk, and we're in the process of working with some of the large market makers to draw that further. And I want to end that there and share another interesting. Kraken acquires crypto derivatives trading platform and index provider Crypto Facilities in a 9-figure deal. So we know that Ripple was partnered with Crypto Facilities, just bought by Kraken, so now Ripple is connected to Kraken. If you see a pattern there, you know Ripple is connected to Coinbase, and we know Ripple is connected and partnered with Binance. So it gets very exciting when you start understanding what's happening and paying attention. Another thing here, we have tokenized stocks and fiat on demand through Sologenic. We've mentioned this before, but we're refreshing that because we still have a theme going on here. Sologenic is a sophisticated ecosystem that facilitates investing and trading of an on-demand tokenized asset, including stocks and ETFs, from 25 plus global exchanges on top of the XRPL, the XRP ledger. So now you have stocks, you have remittance, you have derivatives. What I'm going to quickly do here is share the difference between derivatives and stock options. For many casual investors, the world of derivatives and stock options may seem somewhat complex. In many situations, these two terms are mistakenly used as synonyms, creating an additional layer of unnecessary complexity and frustration. Although neither derivatives nor stock options are essential for the majority of investors, taking the time to properly understand how these investment platforms are used may create new opportunities and open new doors to profit. Generally speaking, stock options are a form of derivative that allow investors to buy or sell a particular stock for a specific price at a predetermined moment in the future. Ultimately, derivatives and stock options are far more alike than they are different. Stock options are a form of derivative that is widely traded today. The term derivative encompasses a variety of investment tools ranging from stock options to contracts for bonds, currencies, interest rates, and a variety of other mediums. But the basics of derivatives are: a derivative is essentially a contract initiated between two individuals, the writer of the contract and the buyer, that assigns terms under which the buyer can either purchase or sell an asset for a specific price at a point in the future. The price of the contract itself is determined by the continued fluctuations in price of the asset as a result of market volatility. A derivative contract can cover a broad range of assets, including conventional investment platforms such as stocks and bonds, as well as more unique assets such as interest rates and currencies. And we're going to finish off this video with: how big is the derivatives market? The derivatives market is, in a word, gigantic. Often estimated at more than $1.2 quadrillion USD on the high end. How can that be? Largely because there are numerous derivatives in existence, available on virtually every possible type of investment asset. And what are we invested in? Digital assets, including equities, commodities, bonds, and foreign currency exchange. Some market analysts even place the size of the market at more than 10 times that of the global world gross domestic product, GDP. I'm going to summarize tonight's information up very quickly. So many people are mispricing this and not comprehending what Brad Garlinghouse and David Schwartz have been discussing and trying to explain as far as what their intent is on all value. People keep focusing on the speculative current price that it's at today, when, to say it poorly, none of these had any true value, and it was again all based on speculation on the greatest bull run we've had. Now look at today. What is the largest asset of all classes? What is the greatest use case, partnership, team guidance and management of any asset? Hands down, that is Ripple, which helps guide XRP to its success as a currency. Again, to move beyond that, the next step is remittance. All of these numbers people are trying to estimate and guesstimate at the price and value of XRP. They can't wrap their head around the remittance market. And that is just one of the smaller. Then you see we're also going into other areas, but we're going to keep it focused with tonight's, the stocks and bonds. And now you see the derivatives, which is larger than all of those others combined. Now how big in your head and your mind can you visualize the price of XRP? What is something worth that can move all value? That's to be determined. But in my mind, I don't see, and I was here through the 217 bull run, and I saw the peaks of the largest assets at that time. And I still, in my mind, see this one dwarfing that in its end game. What that is, there's no certainty, but we do know that the market maturity, at full maturity, is 2025, which aligns with the next, the second from now, 2017. Every 4 years we have 2021, and then market maturity would be 2025. So my point tonight is this is going to be very massive. If you are an XRP investor, breathe, relax. If you're focused too much on it, step aside, walk away, sleep well. Just be patient. You're invested in something that is so massive that you can't comprehend the size of it at this moment. This is not financial advice. We're here for entertainment purposes only. Wishing you guys the best of nights, mornings, and afternoons, wherever you are. And know that we love you greatly and thank you so much for all of your support. And we'll catch you in the next one.